Joining me now in studio is George Kern. He is the CEO at Breitling. Thank you very much for coming in to see us today.
It's a pleasure. Good morning.
Now, Breitling is marking its 140th anniversary this year, so congratulations on that. Inventor of the wrist-worn chronograph. And what I want to ask you about is that Swiss watchmakers are seeing a sharp slowdown, a decline in demand. Can you update us on the state of the market?
So I would say this slowdown is split in two parts. First of all, there's a kind of normalization after the revenge buying from COVID. So we shouldn't compare the figures of today versus the post-COVID year, but the pre-COVID year. The second aspect, of course, there is a more difficult consumer sentiment, interest rates, inflation, geopolitical difficulties. But I mean, I'm in this industry since 30 years. I've seen other crises and will go through this also.
Top-selling brands like Rolex and Patek have been more resilient, but I'm seeing that Richemont and Swatch have seen a sales decline. Some watchmakers in Switzerland are relying on government aid now, 80% of the workers' salaries being paid by the government to prevent any job cuts in the manufacturing sector. You're targeting neo-luxury or casual luxury. How is Breitling navigating this slowdown?
Actually, we're doing fine. We will have a growth this year. And what you see in the industry, in the watch market, is a concentration on less brands. So it's basically the winner takes it all. You will have 6, 7 brands doing the business. And yes, you have smaller brands, weaker brands suffering a lot now. And the bigger brands, the brands who can still invest in retail, in marketing, etc., taking and gaining market share. And this, thank God, is the situation also for Breitling.
The luxury market has relied heavily on China, and we are seeing a prolonged sluggishness in the Chinese market. What are your key markets, and would you be looking at growth in places like India, which is now the world's fastest growing economy?
Absolutely. So we have, I would say, very balanced sales around the world. Our biggest market is the US. We're quite strong in Europe, also in the Middle East. We're growing in China at a lower level, but we're growing. So you need in our days to have a balanced, I would say, split of your sales. Yes, you're right. India is doing very well. It will be one of the biggest economies by 2025. It's a very rich population, 1.6 billion people, more than in China. And, but you have other countries. You have Indonesia, you have Malaysia doing very well. You have overall Southeast Asia doing quite well.
According to Bain, 16% of luxury spend came from China last year. With this slowdown, we are watching, of course, the impact on the Chinese market. Has this slowdown in China impacted your Chinese expansion?
No, we have a strategy we want to further develop. What is true, though, also is you have less Chinese tourists traveling abroad and buying abroad. So this part of the business, what we used to call the tourist business, has been slowed down. But from a Breitling perspective, we will continue to invest. We will continue to open boutiques in China because still it's one of the biggest luxury markets in the world. You cannot fight demography. It's a 1.3 billion country. Just as a point of comparison, Switzerland has 8 million people, so Shanghai is 3 times bigger than Switzerland.